Most people think credit cards are just tools for spending money, but what if I told you that every time you swipe your card, you could be secretly building long-term wealth if you know what you're doing? Well, it's true, and in this video, I'll show you exactly how to unlock hidden rewards, sidestep the costly mistakes, and turn your credit card into a money-making machine. Let's start with buying gas. Using a credit card every time you fill up your tank may seem like a small decision, but it actually has a significant impact on how financially protected you are, because many gas stations display two prices, one for cash and a slightly higher price for credit card payments. Now, you might assume that a debit card works the same as cash, but that's not always the case. And in many instances, gas stations don't distinguish between credit and debit cards. Instead, they process debit card transactions just like credit cards, which means you don't benefit from the lower cash price. Plus, there's also the issue of pre-authorizations. At the pump, most gas stations place a hold of up to $175 on your card until the final amount is processed. But with a debit card, that $175 is held from your actual bank balance, limiting your access to that money until the hold is released. But on the other hand, with a credit card, the hold simply reduces your available credit and not the cash in your bank account, which gives you a lot more flexibility. And then security is another thing you need to be aware of. Gas pumps are often targets for skimming devices that steal your card information when you swipe or insert the card. And if your debit card is skimmed, your actual bank account is at risk, and it could potentially allow someone to drain your bank account dry. And while there are some fraud protections in place, they're not nearly as quick or robust as the protections offered by credit cards. With most credit cards, your liability for fraudulent charges is zero, meaning the risk is borne by the bank and not by you. But even with all that aside, the other benefit that can't be ignored here are rewards, because many credit cards offer elevated cashback or points on gas purchases. So whether you're earning 5% cashback with rotating category cards like the Chase Freedom, or you're getting a solid everyday rate from a co-branded gas station card, you're probably earning more than the few cents you might save by paying in cash. So when you factor in your total gas spending over the course of the year, those rewards add up pretty quick. And by the way, all the specific cards I'm going to mention in this video are US based cards, but if you're based in Canada, I've left links to the best Canadian cards in the description below. But now let's talk about your electronics purchases, because whether it's a new phone, a laptop, or a high-end speaker system, it's always best to pay for them with a credit card. And this decision goes beyond earning points. It's about protecting yourself from the unexpected, because credit cards offer two significant benefits for these types of purchases: purchase protection and extended warranty coverage. For example, a lot of credit cards extend your warranty by an additional year after the manufacturer's warranty expires, and others may match or even double that coverage. So this means that if you buy a laptop that has a 1-year warranty and it fails just after that 1-year period ends, you're still covered. But on top of that, credit cards also allow you to earn rewards on those purchases, whether it's points, miles, or just cash back. And this isn't just about protecting your purchases, but also about maximizing the value of your investment. Because when you're spending a large amount of money, it makes sense to make that purchase work for you. So here's a tip. Before finalizing a major purchase like that, take a moment to consider whether your credit card offers purchase protection or extended warranty coverage. If it does, you definitely want to take advantage of that. But if it doesn't, you might want to consider getting a card that does offer those benefits. But now let's talk about paying your phone bill. Because if you're not using a credit card to pay your phone bill, you're probably missing out on a benefit called cell phone protection, which can save you hundreds, if not thousands of dollars if your phone is lost, stolen, or damaged. However, some credit card issuers do impose an important condition, which is that cell phone protection is only available if you pay your monthly phone bill with that credit card. A handful of different cards offer cell phone protection, including the Amex Platinum and a few different MasterCard World Elite cards, but with the MasterCards, it's important to keep in mind that the coverage will vary by card issuer, so you want to check your benefits guide to confirm that your card is eligible. Business cards like the Chase Ink Preferred and the Ink Premier also offer strong phone protection, and these aren't just convenient perks, they function as a legitimate insurance policy that can protect both your phone and your finances. Coverage typically ranges from around $600 to $1,000 per claim, with deductibles between $50 and $100, depending on which card you have. But when you consider the cost of replacing a smartphone, those deductibles are a very small price to pay for this level of protection. But still, it's important to note that there are specific requirements for making a claim, so it's always worth reviewing the fine print in your card's benefits guide to fully understand what protection you have. But still, if your credit card offers cell phone protection and you're not using your card to pay your bill, you're certainly missing out. And speaking of missing out, if you're not using your credit card when dining in, ordering takeout, or using food delivery apps, you're giving up the elevated levels of rewards that some cards specifically offer for food-related purchases. Take the Amex Gold, for example. The Amex Gold is well known amongst foodies because it offers 4 points per dollar spent at restaurants. And this applies not only to dining at your favorite local restaurants, but also to fine dining and even orders placed through apps like Uber Eats and DoorDash. And over the course of a year, if you just spend $200 a month on dining, that's nearly 10,000 Amex membership rewards points that you'll earn just from that spending. And depending on how you redeem those points, that could be enough for a free free domestic flight. And for anyone who prefers cashback, there are equally attractive options for you too. The Capital One Savor One card, for example, offers 3% back on dining with no annual fee, while the standard Capital One Savor card also gives you 3% back along with additional rewards on streaming and entertainment. And Citi also offers cards that reward dining depending on which one you have. For example, the Citi Custom Cash card gives you 5% back on dining if restaurants are your top spending category for that month. And with all these options, there's no shortage of ways for you to earn rewards on your food purchases. So the key takeaway here is simple. Never use your debit card or cash for dining expenses. Debit cards give you no rewards and no perks. And while no card will refund you for a subpar meal, using a credit card ensures you receive something tangible every time you dine. And the same goes for grocery shopping because there are a ton of cards that offer some serious rewards on grocery purchases. Take the American Express Gold Card. I mentioned the Amex Gold Card a minute ago when talking about dining expenses, but it also offers 4 points per dollar at grocery stores up to $25,000 in spending per year. So if you spend $150 a week on groceries, you could earn over 30,000 membership rewards points every single year. And this is without changing any of your shopping habits. And then there are other cards like the Chase Freedom and Chase Freedom Flex, which also offer pretty attractive rewards for grocery shopping. These cards feature rotating 5% cashback categories that change every quarter, and grocery stores are often included throughout the year. The Discover It card also offers similar benefits, so by timing your purchases correctly, you can earn 5% back on everything you buy at supermarkets during the relevant quarter. However, it's important to note that not every store qualifies as a grocery store for these credit card issuers. Big box retailers like Target or Walmart often don't categorize as grocery stores, even if you're buying food there. So to maximize your rewards, it's best to stick to traditional supermarkets like Safeway, Kroger, Whole Foods, or Trader Joe's. These are the places that reliably trigger the grocery category on your card. Now, while rewards are a significant benefit, when it comes to travel, one thing I see people consistently overlook is the value of the suite of built-in travel protections that credit cards provide. And these protections can save you a lot of money when things go wrong. Like maybe you've got a trip delay or your trip gets canceled, you might have lost your baggage, or even your airline goes bankrupt. Cards like the Chase Sapphire Preferred, the Sapphire Reserve, and the Amex Platinum provide some of the most comprehensive travel insurance out there. And that includes baggage delay insurance, trip interruption insurance, travel accident coverage, and in some cases, emergency evacuation. But not all cards offer all of these benefits, and some issuers, like Citi, have reduced or completely eliminated their travel protections on certain cards. So it's important that you review your card's benefits guide before booking any travel to make sure that you have the coverage you need. Of course, all the points and miles you earn from your card, which you can use for free flights or hotels, are a nice bonus. But if your card doesn't offer the level of protection that we're talking about, you may want to consider upgrading to one that does. And so another thing you want to think about when you're traveling is renting a car. And using a credit card for that can save you both some serious headaches and some serious money. The key benefit you want to look for is collision damage waiver, or the CDW. Because when you rent a car, the rental company will typically offer you their insurance coverage at the counter. But if your credit card includes CDW, then you can decline that expensive coverage and still be fully protected. Here's how it works. When you pay for the entire rental with your credit card and then decline the rental agency's collision insurance, your credit card will cover any damage or theft to that rental car. And this includes issues like scratches, dents, or even completely losing the car. And depending on the card, it may also cover additional costs like towing and any administrative fees. So this protection alone can save you thousands, if not tens of thousands of dollars in the event that something goes wrong. But as always, not all cards offer the same level of coverage. Some cards only provide secondary coverage, which means that they only take effect after your personal auto insurance has been paid out. For example, the Chase Sapphire Preferred and Reserve cards are known for offering primary CDW coverage, which means they cover the damages first without involving your personal insurance. And so as a result, you avoid having to file a claim with your insurance company, which prevents them from hiking your premiums in the future. But there are a few other details to consider here as well. Collision damage waiver coverage typically applies to most standard rental vehicles, but if you're renting a luxury sports car or some kind of specialty vehicle, then you might not be covered. Plus, CDW coverage often excludes rentals in specific countries. So if you're planning to rent abroad, it's important that you review your card's policy to ensure you're protected. But the bottom line is this: paying for your rental car with a credit card that offers CDW coverage is one of the best ways to protect yourself from unforeseen expenses. But now let's move on to another area where using a credit card offers you a lot of security, and that's online shopping. Because using a credit card protects you from fraudsters and scammers who try to disappear the moment you buy something from them. Credit cards offer zero liability fraud protection, which means that if someone uses your card without your permission, you are not responsible for any of those charges. With a debit card, the money is directly deducted from your bank account, and it could take weeks or even months to get it back if your bank even agrees to refund that charge. And chargebacks are another option available to you when you shop online using a credit card. If a merchant fails to deliver what they promised, sends you a counterfeit product, or just stops responding to you entirely, you can dispute the charge with your credit card issuer. And most issuers will investigate the issue, and if your claim is legitimate, you can usually get your money back. And this protection is particularly valuable when you're shopping with smaller retailers, third-party sellers on large platforms like Amazon, or international merchants. Because if something goes wrong, a credit card provides a way to challenge the transaction and protect your funds. But even if we put all the fraud and disputes aside, credit cards are just easier to use for online shopping. You can monitor your charges in real time, get alerts for any suspicious activity, and in some cases, you can use virtual card numbers to give you added security. Now, your credit cards also provide an added layer of protection when you pay for subscription services online, because subscriptions can quietly accumulate in your life, and before you know it, you're paying for multiple streaming platforms, a few different productivity apps, and even a mystery box you completely forgot about. But before we go there, let's first discuss overdraft protection. If your subscriptions are linked to a checking account or a debit card, there's always the risk that an unexpected charge, such as a quarterly renewal that you forgot about, they could drop your balance below zero. And when that happens, your bank may hit you with an overdraft fee, which could be in the range of $30 to $50 or more. But credit cards eliminate this problem. Since recurring charges draw against your credit limit rather than your actual bank balance, there's no risk of overdrawing your account. Of course, you still want to ensure that you're not nearing your credit limit, but at least you won't wake up to a negative checking account balance and a pile of bank fees. Plus, in addition to preventing overdraft issues, credit cards make it easy to track your recurring charges. Most issuers now allow you to categorize transactions or even display subscriptions separately in your transaction history. And this makes it super simple to see exactly what's auto-renewing each month, which is key if you want to cancel services that you no longer use. Because if you don't have a clear overview, it's easy to forget about those recurring charges. So here's another tip. If you have an older credit card that you're not using much, but you want to keep open to help your credit score, assign a single subscription like Netflix or Spotify onto that card. And then by setting up autopay and paying it off regularly, your card issuer will see the account as being actively used, which can help maintain your credit history and prevent the card from being closed. So now it's clear that using the right credit card in the right way can protect your wealth, unlock serious rewards, and turn your everyday spending into something way more powerful. But there's something else the biggest points earners are doing to rack up 6 and even 7-figure points balances, and almost nobody's talking about it. Because if you just understand this one thing, you'll start earning a ton of points completely on autopilot. So to learn how to get more points than anyone you know using a dead simple strategy that almost everyone overlooks, watch this video next.